Hello everyone and welcome back to another video. Today we are going to be discussing operating inside of higher time frame inefficiencies. So here we're looking at the daily chart for NASDAQ before today's candle printed. And if we're just looking at this dealing range, right, the dealing range high to the dealing range low, we've just gotten down to a discount, right? So we have equilibrium, which of course is 50% of this range. And we have this fair value gap that's not charted, but you can see it here right at equilibrium. And we have this one right below it that's charted here, this white rectangle. Now, if we look below this BISI here, there's no inefficiency below here. So before getting to this dealing range low, I'm kind of looking at this at the moment as the last line of defense. So we'd want to see support out of this fair value gap. Now, if we do get support out of this fair value gap, where would we target? Well, we have two SIBIs here. The first target, of course, would be this lower SIBI with the magnet right here. So keep that in mind while we go to the lower time frames. So I want to discuss this hourly chart on NASDAQ before New York open. So we can see right here, this is 8 a.m. And what has occurred? Where is the market? How would I read this? Well, as you can see, we have a lot of session highs up here. Okay, the market's been dropping and we have Friday high, which is in close proximity of Thursday's high. So this is relative equal highs. So people see this as what? Resistance, right? Strong resistance, double top, triple top, whatever. We obviously do not look at it that way because smooth edges become jagged, as ICT likes to say. So we want to target this buy side liquidity. Now, if we push through that, we would obviously target Wednesday's PM session high, then Wednesday's AM session high, this inefficiency here, Wednesday's high, along with those daily SIBIs that we just discussed. So identifying those buy side targets, I want to talk about what occurred down here. So we came down and we swept this swing low here. So we've had a stop trade during London session. And then the new week opening gap, this white box, I have it labeled here, is important. So we expand to and through it and we get a candle close above. So the new week opening gap, it's an important area for this week. So the fact that we're expanding through it, closing above, I'd want to see it offer support after we do that, okay? Because the bodies are telling the story, right? If we were bearish, we would have wanted to see it come up to it and use it as resistance. Obviously, we closed above it, tapped into it nicely, and then obviously we'll see how he acted after that. So down to the 1 minute, we can see that this is where we got that push through the new week opening gap, right? To close above it. And then we return to it here, use it as support beautifully, and then started to consolidate and took off, which we'll discuss, of course. But we have this fair value gap that's right at the new week opening gap. So that's a higher probability in and of itself, okay? But I want to focus on this 850 to 910 macro here. During this macro, we're expecting a spooling of price, expecting something to occur, expecting it to give us a setup, things of that nature, right? Right here, we see that cracking correlation. SMT with ES. So ES was making a lower low based off this low here. While as we can see here, NASDAQ failed to make that lower low. So using that logic, NASDAQ is the stronger of the two indices. So if I'm looking for longs, I want a long NASDAQ. And obviously we can see we expanded after that SMT, which occurred during the macro, 9:30 open, and we got to Friday's high, Thursday's high, which is also the daily SIBI, and then we'll discuss what occurred after that. So first off, we're zoomed in to this daily inefficiency, and I have the quadrants marked of this higher time frame fair value gap. Now, what time are we coming into this fair value gap? The 950 to 1010 macro. So this is when we expect a spooling of price, which of course we see here beautifully. How did we know that we were going to continue higher and not just tap this 25% level and then dump? Well, first off, I would have wanted to see a candle close above this 25% level. Then I would have taken this fair value gap long, because that is the smart money handshaking. The reason ICT says the bodies tell the story is because of things like this. High frequency trading algorithms are looking for signatures like this, not with this wick here, but say this candle closed above, they're going to see that closure, and then their algorithm is going to tell them seek longs, okay? So we would see a closure above a 25%, retracement to discount, buy. Closure above 50%, buy. Closure above 75%, buy, etc. That's the main logic. Obviously, we expanded, we didn't close above it here, and then we expanded above 50% and didn't have a retracement here, okay? We'll see as we go forward in this video, once we get to the larger inefficiency that we priced to today, still on NASDAQ, we'll see how beautifully the algorithm worked those quadrant levels. But look at what's occurring here. discount PD arrays are still supporting price, then we displace through the 25%, the 50%, the 75%, and we close above this daily fair value gap. We get Wednesday PM session high, consolidate, then extend higher to Wednesday's AM session high. So we can see obviously today we extended higher into the larger fair value gap that we mentioned at the start of this video. And just like we did with this lower inefficiency, I want to look at the quadrants of this larger inefficiency to gauge how deep we could dig into it once price reached it. Now, if we're just looking at this 1 minute chart, and of course, this is that large daily fair value gap that we just mentioned, there's a lot of space in terms of just handles from the low of the fair value gap to the first quadrant or the 25% level, right? We can see it's about 50 handles from the low to the 25%. Now, I want to take a deeper look to see how we could understand if it's reasonable for us to expect price to deliver to at least the 25% level of this large fair value gap. Now we see that these blue lines are no longer the quadrants, but the 16th levels of that larger daily fair value gap. So I will share these fib settings with you guys on the next slide. But for now, I want you guys to focus on what price does after closing above each of these 16th levels of this large daily inefficiency. So right here at 2 p.m., price comes up and closes within this daily fair value gap, seeks a discount, and then what does price do? Comes up to this first 16th level and closes above that level. What occurs once we close above that level? We retrace to a discount, and then what do? We close back above that 16th level, retrace to this fair value gap, which is also this first 16th level. After we do that, what occurs? We expand and close above the next 16th level, right? So we're climbing the ladder. What occurs after we close above that next 16th level? We return to a short-term discount and then expand to the next 16th level. What occurs when we close above this next 16th level? Short-term discount, next 16th level. Then look at how price respects these two 16th levels. Close above, retrace to it. Back above, retrace to it. Back above, return to it. Expand, close above this one, reach for this next 16th level, and then where do we return? Exactly this 16th level. This is 4 p.m. close, of course, and we expand higher and try to reach for this next 16th level. So essentially, think about and just study this in your charts when we have large, higher time frame inefficiencies, these levels, okay? If we can use the quadrants, we can use the eighths, we can use the 16ths, so on and so forth. Now, this isn't to inspire over-analysis, and you don't need this to be a good trader. You don't need this to be able to read order flow, but it's a tool I use if we're operating inside of large, higher time frame inefficiencies. So again, I'll make a video specifically on smart money handshaking with those higher frequency trading algorithms, but all of those algorithms are seeing, okay, close above this level, retrace and buy. Close above, 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 retrace and buy, etc. Then we just have time distortion. Close above, return to this level, random. No, that's exactly 16,775. That can be your homework if you want to study if that's true or not. That low is exactly this 16th level. Okay, so there's logic based off these levels that those high frequency trading algorithms are working on. So it's an interesting study if you go back in large fair value gaps, whether it's NASDAQ, ES, dollar. I don't trade Forex, but I'm sure if you looked at Forex, you'd see similar things like this. It's a great, great study. And as promised, here are the 16th levels. Pause the video and you can put these into your own trading platform if you so desire. As always, thank you everyone for watching. Be sure to follow me on Twitter. Join our free Discord in the description of this video. And let me know in the comments if you guys like this video. Let me know what else you guys want to see in future videos in terms of topics. And I will speak to everyone soon.